Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of corporate filings. Today, we're cracking open Delek Logistics Partners' latest 8K filing. It sounds like a snooze fest, but trust me, there's a plot twist involving a company buying back its own stock. It's like a corporate magic trick we need to figure out. So, on February 24, 2025, Delek Logistics Partners made an interesting move. They've decided they might buy back shares of their own company, common units, from Delek US Holdings. Basically, Delek Logistics wants to potentially purchase its own stock back from one of its parent companies. Here's the deal, they're talking about spending up to $150 million on this repurchase plan, and it could last until the end of 2026. So, it's not a one-time thing, but something they might do over time. When a company buys back its own stock, it often means they think their stock is undervalued, like it's worth more than what people are currently paying for it. This move can also reduce the number of shares available, potentially driving up the price of the remaining shares. How much will they pay for each share? They'll be looking at the average price of the shares over the 30 days leading up to the purchase. This helps ensure they're paying a fair price based on recent trading activity. Where's the money coming from? Delek Logistics plans to use either the cash they have on hand, meaning the money they have in the bank, or they might borrow money using their existing credit lines. Now this is where it gets interesting. Because Delek Logistics and Delek US Holdings are related, this deal was carefully reviewed. The board of directors, specifically a conflicts committee, which is made up of independent directors, had to approve it. They even hired their own legal advisors to make sure everything was fair and above board. The audit committee of Delek US Holdings also had to agree. This is to prevent anyone from taking advantage of the situation because of the close relationship. Both Delek Logistics and Delek US Holdings had to make promises, called representations and warranties, about things like their right to enter the agreement and the accuracy of the information they provided. It's like saying, I promise I'm being honest and have the power to do this. Let's talk about the relationship between these companies. Delek Logistics is managed by a general partner, which is fully owned by Delek US Holdings and its related companies. This means that some of the same people who are officers and directors at Delek US Holdings are also in charge at Delek Logistics. Plus, Delek US Holdings owns a big chunk of Delek Logistics stock, around 63.6% of the common units. This close relationship is why everyone is being extra careful to make sure the stock buyback is fair. Moving on, Delek Logistics also released its financial results for the last quarter of 2024. Now, let's dive into those numbers. We can find the full details in Exhibit 99.1 of this report, which is the official press release about their earnings. This is where we get the real scoop on how the company performed. In addition to past performance, they also gave some estimates for 2025. This is like a sneak peek into what they expect to happen in the future. You can find these predictions in Exhibit 99.2. It's always good to remember that these are just estimates, not guarantees. Now, here's what it all means. Delek Logistics is making a bet on itself by buying back its own stock. This suggests they're confident in their future prospects. The careful review by independent parties shows they're trying to be transparent and fair, even with close ties to their parent company. Looking at this situation, I think Delek Logistics seems to be trying to boost its stock value and show confidence to investors. The stock buyback, if executed, can reduce the number of shares available, increasing the value of each remaining share. On the other hand, they are planning to use their cash or credit facility, so depending on how much cash they have and the interest of the credit facility, this could hurt their financials. One potential risk is that if their financial performance doesn't meet expectations, the stock price might not go up as much as they hope. Also, if they use too much cash for the buyback, it could limit their ability to invest in other opportunities. It's all about balancing the potential reward with the risks. Overall, Delek Logistics appears to be taking a calculated risk. Their 2025 guidance will be important to watch. The stock buyback program is a significant move, and how they manage it will reveal a lot about their strategy and confidence in their future. Thanks for watching. If you found this breakdown helpful, don't forget to like, comment, and subscribe for more deep dives into the world of corporate filings. Let me know in the comments which company you'd like me to decode next.